EU plans for lifestyles without Russian gasoline amid inflation spike. Brussels EU leaders met on Friday to prepare for further cuts in Russian fuel, restrict the impact on inflation and are seeking for opportunity elements, accusing Moscow of weaponizing energy through a deliver squeeze that Germany warned could partly shut its industry. A day after celebrations over setting Kyiv on the road to Club of the Bloc, Friday's summit in Brussels changed into a sober mirrored image at the financial effect of Russia's invasion of Ukraine. The belief of cheap electricity is long past and the belief of Russian strength is essentially gone, and we are all in the manner of securing alternate assets, Latvian Prime Minister Krišjānis Kariņš mentioned, adding governments ought to assist those quantities of society who are suffering the most. Leaders of the 27 EU countries will, in keeping with a draft summit assertion visible via area, the blame for a big spike in costs and sagging global increase at the war that began precisely 4 months ago. Following unheard of Western sanctions imposed over the invasion, a dozen European international locations have up to now been thumped by cuts in fuel flows from Russia. It is just a depend of time earlier than the Russians near down all fuel shipments, stated one EU respectable ahead of Friday's talks. German Economy Minister Robert Habeck warned his U.S. became heading for a gas shortage if Russian elements remained as little as currently, and a few industries might need to close come wintry weather. Companies should forestall production, lay off their people, supply chains might collapse, humans might move into debt to pay their heating bills, he instructed Der Spiegel mag, adding it was a part of Russian President Vladimir Putin's approach to divide the country. The EU depended on Russia for as a lot as 40% of its gasoline desires before the conflict, rising to 55% for Germany, leaving a huge gap to fill in an already tight international fuel market. Weaponization of gas inflation become the main subject in morning talks amongst leaders at the EU's financial state of affairs, but there were also wonderful remarks about boom and the summertime tourism season, an EU legitimate stated. Inflation in the 19 nations sharing the euro foreign money has shot to all-time highs above 8%, and the EU's Gov expects boom to dip to 2.7% this year. Eurogroup leader Pascal Donohoe warned that the bloc should acknowledge the hazard we should face if inflation becomes embedded in our economies. According to a draft statement visible by way of, EU leaders will say that, in the face of the weaponization of gas via Russia, the European Commission need to find ways to steady supply at less expensive prices. We need to start shopping for power together, we need to put into effect rate caps, and we want to make plans collectively to get through the winter, Belgian Prime Minister Alexander De Croo stated on Friday as he arrived on the summit. If we don't pay interest, then the whole EU economic system will go into a recession with all its results. The bloc responded to the battle with uncharacteristic speed and harmony, but some sanctions, including a planned embargo on Russian oil imports, have repercussions for its economies. EU international locations have already poured billions of euros into tax cuts and subsidies to combat surging strength costs. But that adds up to hefty payments for already stretched coffers, leaving many scrambling to find a solution, and EU nations disagree on a bloc-wide strategy to deal with soaring expenditures. Spain and Portugal capped gas expenditures in their nearby strength market this month, however different states warn price caps could disrupt strength markets and drain nation coffers similarly, if governments needed to pay the distinction between the capped fee and the charge in worldwide gas markets.